To keep you updated on the capital and financial markets, here is a recap of what happened.
While institutional asset owners such as pension funds and insurers say they remain committed to sustainable investing, they're less wedded to ESG as an umbrella concept. They now widely treat ESG as three separate parts as opposed to a single strategy, according to a survey by Morningstar Inc. of 25 asset owners across North America, Europe, and the Asia-Pacific region. Until recently, the anti-ESG push has been concentrated in the US. Mainly, the asset owners seem less concerned about what ESG is called versus how it is implemented across their global portfolios, according to the Morningstar report released on the 3rd of June. The environmental part of ESG is the primary focus for investors ahead of social and governance-related issues, with the majority viewing climate as a material investment factor. Quant Group AQR Capital Management is embracing artificial intelligence and machine learning techniques for trading decisions, ending years of reticence from one of the sector's historic holdouts. The Connecticut-based hedge fund that has $136 billion under management has surrendered more to the machines after years of experiments, its founder Cliff Asness told the Financial Times. "When you turn yourself over to the machine, you obviously let data speak more," he said. All quantitative hedge funds, including Two Sigma, Man Group's AHL division and Sir David Harding's Winton, use computing power and algorithms to filter vast amounts of data and then employ sophisticated models to make investing decisions. But AQR has previously been hesitant about removing humans from trading decisions, instead favoring rules-based computer models developed by humans to target explainable market patterns. Under a new policy introduced in China's southern Guangdong province, managers of government investment funds will only be allowed to collect management fees from profits, ending the practice of taking high fees from the principal even when a fund loses money. The change, put into effect by the Provincial Finance Department on the 31st of May, means fund managers will not receive fees if a government fund fails to generate a profit, Hu Bo, associate professor at Renmin University's School of Finance, told e-Zine. The new approach follows the model of how private equity funds hold managers accountable for performance, and is more likely to help government funds preserve and grow capital, said Xie Zhaohuang, Secretary General of the state-backed China Fund 50 Forum. Xie expects the model to be adopted by other provinces and cities. Big institutional investors are shifting away from U.S. markets as Donald Trump's trade wars and the country's escalating debt fuel fears about the dominance of American assets in global portfolios. The U.S. president's erratic trade policy has shaken global markets in recent months, sparking a sharp sell-off in the U.S. dollar and leaving Wall Street stocks lagging far behind European rivals this year. Trump's landmark tax bill, which is forecast to add $2.4 trillion to Washington's debt over the next decade, has also increased pressure on U.S. Treasuries. The move away from U.S. assets has pushed up European markets at the expense of their U.S. counterparts and has been signaled by surveys of big institutional investors' allocation decisions. A poll of fund managers published by Bank of America last month showed the biggest underweight in the U.S. dollar in nearly 2 decades. The Securities Commission Malaysia alerted the public on a new investment scam involving a cloned version of the SC's public register of license holders and registered persons. This method of deceiving investors sees scammers falsely claiming to represent entities purportedly licensed by the SC. To support these false claims, potential victims are directed to a fraudulent website that mimics the SC's official public register portal. Upon entering the name of the fake entity into this cloned site, the search result will show that the fake entity is legitimately licensed by the SC. The fake listing includes fabricated company registration numbers, license details, and other fictitious credentials. Victims are persuaded to transfer funds into mule bank accounts allegedly for the purpose of investing. Since the discovery of this new investment scam, the SC has taken immediate steps to bring down the identified cloned websites. Watch the latest episode of Coffee Talk to find out about what is going on in the industry, exclusively on FIMM's official YouTube channel. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.